Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the next problem number 5 in this assessment of individuals. Till the last video I've completed 4 problems on computing the total income and tax liability of individual. So if you are continuously watching every video, then definitely you will be in a position to solve the problem on how to compute the total income and tax liability of an individual for the assessment year 21-22. So before starting the next problem number 5, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always before start watching the problems, you must have a printout. Take a screenshot of the solution of 5th and 6th problem. Then I'll explain each and every point of the problem. Come on, see the 5th problem. Sri Pradeep Saxena, a resident individual, has furnished the following details for the previous year 2021. Compute total income and tax liability for the assessment year 21-22. So as usual, we have to compute first total income, then we have to compute the tax liability. Income from salary computed 5,60,600. No need to compute, already it is computed. So directly we'll take, see, computation of total income of Sri Pradeep Saxena for the assessment year 21-22. Income from salary 5,60,600 given in the problem, computed. No need to compute. If salary received is given, then we have to compute. But here salary income computed is given. Directly we have taken in the order column. Then a residential house property is purchased for 21 lakh with a bank loan of 11% interest on 3rd April 2018. Rent received from the house property is 72,000 per annum. Municipal taxes paid 10,000, repairs 1,800, and interest on loan taken to purchase the house 2,31,000. In this case, we have to compute the income from house property. So how to compute? Already in the previous videos I have explained you the procedure of computing the income from house property. First we take the GAV, gross annual value, which is higher of the following 3: municipal rental value, fair rental value, actual rental value. But in our problem, we are not given any municipal rental value, fair rental value. Only actual rent is given 72,000 per annum. So we take GAV is 72,000. So gross annual value 72,000. From GAV, municipal taxes will be deducted. Here municipal taxes are 10,000 given in the problem. Municipal taxes paid to 10,000, deduct 10,000. 62,000 is the NAV, net annual value. From NAV, 2 deductions are allowed under section 24. First deduction under section 24A, that is standard deduction. Thus, that standard deduction is 30% of NAV fixed. Any SSC who is having income from house property, they will get 30% of NAV as standard deduction under section 24A. So 30% of NAV, 30% of 62,000, 18,600. Put it in bracket because we have to deduct. From NAV, we have to deduct. That's why I am putting in bracket. Then interest on loan under section 24B. So here the SSC has taken a loan to purchase the house. How much loan? 21 lakh. What is the rate of interest? 11%. So if you calculate 11% of 21 lakh, you will get 2,31,000. That's what it is given in the problem. Interest on bank loan to purchase the house 2,31,000 allowed. So only 2 deductions are allowed under section 24, 24A, 24B. 24A is the standard deduction, compulsory. And 24B is interest on loan taken to purchase the house. So the total of these two, 62,000 minus 18,600 minus 2,31,000, you are getting negative minus 1,87,600. This is the loss from house property because you are getting negative. 62,000 minus 18,600 minus 2,31,000, you are getting minus 187,600. When you get negative, it is called loss. So this is a loss from house property. So according to the provision, the loss from house property can be set off from other incomes. That's why I am putting it bracket, deduct. Then next one is income for interest on bank deposit. Interest on bank deposit is taxable under income from other sources. Then dividend from Indian companies, that is also taxable under income from other sources. Long-term capital gain on sale of shares and short-term capital gain on sale of shares. Actually, long-term capital gain on equity shares is exempted up to rupees 1 lakh. Over 1 lakh rupees is taxable at 10% flat. If the shares are sold in a recognized stock exchange on which SST was paid, security transaction, STT, security transaction tax was paid. So here nothing is mentioned. So we assume this long-term capital gain was on shares was received from the recognized stock exchange. So 1 lakh rupees exempted. But for the sake of computing the total income, we include long-term capital gain on shares 1 lakh. But while calculating tax, we write the note that long-term capital gain on shares up to 1 lakh rupees fully exempted, not taxable. But for the sake of computing total income, we should take it. But while calculating the tax, we should not take it. Next, short-term capital gain on shares on the sale of shares. Again, Income Tax Act says short-term capital gain on sale of shares is taxable at a flat rate of 15%. Special income. But for the sake of computing the total income, we include short-term capital gain on shares. The short-term capital gain on shares, long-term capital gain on shares, both we are including only to calculate total income. Later on, in calculating tax liability, we separate it. Then qualified saving under section 80C, 81,000, directly given. Then premium paid on mediclaim of the following. Premium paid on mediclaim, it is allowed as deduction under section 80D. Then donation to Prime Minister's National Relief Fund and donation to Sri Ramakrishna Mutt. So these are deduction allowed under section 80G. Last one, tax deducted at source, TDS. This tax deducted at source will be deducted from tax liability. Lastly, so first of all, we have computed income from salary is given. Income from house property we have computed. There is a loss from house property. Short-term capital gain 91,000. Long-term capital gain on shares 1 lakh. So total capital gain is 1,91,000. Now income from other sources. So interest on bank deposit 37,100. Then dividend on company, Indian company shares 60,000. So total income from other sources 97,100. Now you add up 5,60,600 minus 187,600 plus 1,91,000 plus 97,100. You will get 6,61,100 is the GTI, gross total income. From gross total income, deductions under section 80 will be allowed. First deduction under section 80C, qualified saving, 81,000 directly given in the problem. So 81,000 qualified saving. 80D, medical insurance premium. Regarding medical insurance premium, the limit is if the medical insurance premium is paid on the life of the SSC or spouse or dependent children, then up to 25,000 is the limit. If medical policy is taken on the parents, then additional 50,000 will be allowed. So totally 25,000 for SSC and spouse and dependent children, and 50,000 additional if the policy is taken for the parents. Here in our problem we are given the premium paid on medical claim policy for self age 53 years 8,000, wife 48 years 6,100, father 75 years 9,900, mother age 70 years 10,200, and son age 18 years 7,000. So here if you add up all, you are getting only 41,200. Actually the limit goes up to 75,000. So here completely 41,200 is allowed as deduction under section 80D. Last one, Deduction under section 80G for donations given. Donation given to Prime Minister's National Relief Fund. 100% qualified amount, rate of deduction 100%. So how much is the amount given? 25,800 is given. So 100% of 25,800, that is allowed as deduction. But Sri Ramakrishna Mutt, the qualifying amount is the donation, but rate of deduction is 50%. So 50% of 6,200 is 3,100. 50% of 6,200, 3,100. So total donations allowed is 28,900. Deduction under section 80G. Donations 28,900. We have taken all the deductions 80C, 80D, 80G. Take the total of the deduction 81,000 plus 41,200 plus 28,900. 1,51,100. Now deduct 1,51,100 from 661,100. 5,10,000 is the total income. That's it. So first part we have completed total income. The second part it is asking you to calculate the tax liability. So first of all we have to segregate the normal income and special income. The total income is 5,10,000. From this 5,10,000 we deduct the special incomes. Special incomes are short-term capital gain on shares and long-term capital gain on shares, because there is a flat rate of tax on these special incomes. So long-term capital gain on shares 1 lakh and short-term capital gain on shares 91,000. So minus 5,10,000 minus 1 lakh minus 91,000, 3,19,000 is the normal income. Now first we compute the tax on normal income. First slab up to 2,50,000, income 2,50,000 nil, no tax, basic exemption. The second slab goes from 2,50,001 to 5 lakh. But our income is not going up to 5 lakh. Our income is only 3,19,000. So 3,19,000 minus 2,50,000. The balance remaining 69,000, on which 5% is the rate of tax. It comes to 3,450. So 3,450 is the tax on normal income. Tax on normal income. To this we add tax on short-term capital gain on shares. The short-term capital gain on shares, 91,000 is the short-term capital gain. 15% is the rate of tax on short-term capital gain. So 15% of 91,000, 13,650. Add up both 17,100. To this health and education says 4%, 684. Add up 17,784. 17,784 minus tax deducted at source. Already TDS was made. So how much TDS? 16,000. Deduct 1,784 is the tax liability. Now round it off to the nearest 10. So 84. 84 will be made as 80. So 1,780 is the rounded off tax liability, tax due. That's it. So this is the complete explanation of problem number 5. Now problem number 6. Mr. Vasudev Reddy is a government employee. His income particulars for the previous year 2021 are as under. Compute the total income. In this problem we are required to compute only total income, not tax liability, right? So here you can see computation of total income of Mr. Vasudeva Reddy for the assessment year 21-22. Basic pay 21,500, DA dearness allowance 10,400 per month, entertainment allowance 4,000 per month, profession tax paid 350 per month. So here we have to compute the income from salary. We are given basic salary, DA and EA, entertainment allowance. So here you can see basic pay 21,500 into 12, 2,58,000. DA 10,400 into 12, 1,24,800. EA 4,000 into 12, 48,000. Take the total of these three, 4,30,800. This is called gross income from salary. From gross income from salary, deductions are allowed under section 16. 16 1A, 16 2, 16 3. 16 1A is the standard deduction, compulsory deduction, 50,000. 50,000 rupees is the standard deduction. Actually, standard deduction is list of the following: gross income from salary or 50,000, whichever is less. Here, gross income from salary is 4,30,800, whereas fixed amount is 50,000, whichever is less. So 50,000 will be allowed. Second, EA reduction. Entertainment allowance deduction under section 16(2) will be allowed only for government employees. Only for government employees. Here the SSC is a government employee. So EA reduction will be allowed to the least of the following three amounts. First, actual EA received. The actual EA received is 48,000. Second, 20% of salary. Salary means basic. Here basic salary is 2,58,000. 2,58,000 into 20%. Third, fixed amount of 5,000. Whichever is least. So actual EA received 20% of salary or fixed amount of 5,000. So here whichever is least, the least is 5,000. So 5,000 rupees EA deduction will be allowed. Profession tax paid under section 16(3). It is given in the problem 350 rupees per month. So 350 into 12, 4,200 professional tax deduction. So all the three deductions are allowed. Deduct 4,30,800 minus 50,000 minus 5,000 minus 4,200, 3,71,600. This is the income from salary. That's it. Now next head of income is income from let out house 27,200, loss from self-occupied house 18,000. So we can make intra head set off. Income profit from let out house minus loss from self-occupied house. So income from house property, income from let out house 27,200 less loss from self-occupied house 18,000. Deduct, will get 9,200 income from house property. Next, income from units of Birla Mutual Fund and dividend from shares of Indian companies, dividend from shares of foreign companies. Remember, income from units of mutual fund fully taxable, dividend from any company, Indian company or foreign company, fully taxable under income from other sources. Income from HUF received. Any income received by a member from Hindu undivided family is not taxable. So after completing the note, after completing the solution, you must give a note that income received from HUF, Hindu undivided family, is not taxable in the hands of the member. That point you are right. Then qualified saving under section 80C. This is allowed as deduction, directly given. Interest on higher education loan, that is also allowed, 80E. Interest on car loan, not allowed. There is no deduction allowed for interest paid on car loan. Interest paid on educational loan allowed. So here, after completing the solution, you have to give a note. Interest paid on car loan is not allowed as deduction. Then donation under section 80G. So deduction will be allowed under section 80G for donations, 15,000. So donation under section 80GGA. This is also donation given for scientific research and rural development. Fully allowed as deduction. That's it. So I explained you about income from house property. Now income from other sources, income from units of Birla Mutual Fund 16,500, fully taxable under income from other source. Dividend from shares of Indian company, dividend from shares of foreign company. Any company dividend received is fully taxable. So we have taken 16,500 plus 9,000 plus 21,000, 46,500 is the income from other sources. Now you can take the total. 371,600 plus 9,200 plus 46,500. The gross total income GTI 4,27,300. So 4,27,300 is the gross total income. From this, deductions are allowed under section 80. So first of all, deduction under section 80C. That is directly given in the problem. 1,20,100. The maximum limit of deduction under section 80C is 1,50,000. Here 1,20,100. Deduction under section 80E for interest on educational loan 16,000 allowed. Deduction under section 80G donations 15,000 allowed. Then deduction under section 80GGA donation for scientific research and rural development 10,000. Take the total of the deductions 1,61,100. These are the total deductions under section 80. Now deduct 4,27,300 minus 161,100. 2,66,200 is the total income of the SSC. That's it. So each and every point I have explained. But apart from that, apart from making the solution, you must give the notes. In working note, after completing, in examination, after completing the solution, you must give a working note. First working note, the SSC is a government employee, so EA deduction under section 16(2) is allowed to the least of the following three amounts. Actually, he received 20% of salary or fixed 5,000, that point. And secondly, income. Income from units of Birla Mutual Fund, fully taxable, and dividend from Indian company, foreign company, fully taxable as income from other sources. Then deduction under section 80G, 80E, 80C, 80GGA will be allowed, but interest paid on car loan taken will not be allowed as deduction. And any income received from a Hindu undivided family will not be treated as an income, not taxable. These are the points you are writing working note. So I told you in the previous video also, whenever you watch the video of income tax, always keep a notebook beside you and note down the points, whatever I'm explaining, whatever I'm explaining about each and every point. Then only you can be able to get the complete command on the subject. So totally 6 problems I've completed on assessment of individuals. Inshallah, next video I'll continue with the 7th problem.